We are not just a team of bank exam tutors, we are in fact ex-bankers ourselves. Welcome to day 12 of Daily 5 MCQ series for State Bank of India's Circle-Based Officer exam of 2025 year. In each video of this free lesson series, we will discuss 5 MCQs that are very important from the angle of the exam. Without further ado, let us begin the class. The topic of today's class will be NPA. So what is NPA? That will be our first question. Question 1. NPA is dash. Okay. Option A, non-performing asset. Option B, a bad loan. Option C, an asset which has ceased to generate income to the bank. Option D, an asset which eats up the bank's profit in the form of provision. Option E, all of the above. Here the answer is option E, all of the above. The full form of NPA is non-performing asset. It is also called a bad loan. So what a non-performing asset is, in banks, all the loans are classified as assets. All the loans are the assets of the bank. All the deposits are liabilities to the bank. So once a loan becomes non-performing, it is called a bad loan or a non-performing asset. Okay. And look at option C. Once a loan account becomes NPA, it stops generating any income to the bank. And look at option D. Not only does an NPA stop generating income to the bank, but the bank will also have to set aside a portion of its profit for the sake of that bad loan. When a bank sets aside a portion of its profit for the sake of this NPA or a bad loan, that portion that is set aside is called provision. Okay, we shall understand what provision is in the next class or so, but as of now just understand this much. The full form of NPA is non-performing asset. It is also called a bad loan. Once an account becomes NPA, it stops generating income to the bank, and not only does it stop generating income to the bank, but will also reduce the profit of the bank, because the bank will be mandated to set aside a portion of its profit for the sake of this NPA. Okay. Now before going to the next question, let us see how BankerWings can better help you prepare for the SBI CBO exam. We have launched 2 courses for SBI CBO 2025 exam. In the first course, you will get summary notes on all the topics. These notes will be crisp, precise and very to the point. But most of you might not have enough time to go through the notes. For such candidates, we have provided top, most probable and most important multiple choice questions. If you are someone who does not have enough time to go through the notes, because we know you are all working candidates, you can go through the multiple choice questions and then finish the syllabus. But apart from the summary notes and the multiple choice questions, we have also provided 10 mock tests. These mock tests, they will be as per the pattern of the actual exam. So you can expect similar type question in your real exam also. In the second course, we have provided only 10 mock tests. These mock tests, they will be, as I said, as per the trend and pattern of the actual exam. This is for those people, the second course is for those people who just want to test their preparation level. And let me tell you one thing about our courses. The quality of our courses is excellent. They are the best in the market. But that is what any tutor would say, right? That his or her content is the best. So why should you trust me? I will tell you why. Because we at BankerWings, we are not just a team of bank exam tutors. We are in fact ex-bankers ourselves. We have passed multiple bank exams, both at fresher entry level and lateral entry level. We have passed multiple IBPS exams. So when we say that we know what the banks are actually looking for in these exams, we really do, because we have worked there. Coming back to our daily MCQs, question 2. An amount due to the bank under any credit facility is dash if it is not paid on the due date. What is a credit facility? In simple words, a credit facility is a loan. So all the loans, they are to be repaid on set dates, either in way of interest payments or installments or lump sum repayment. So once that date on which a a loanee or a borrower has to pay certain amount to the bank, that date is called due date. So if a borrower does not pay the required amount on a due date, what is such an amount called? So that is the question. Okay, let us take a look at the options. Option A, EMI. Option B, underdue. Option C, due. Option D, installment. Option E, overdue. So what is the answer here? Here the answer is option E, overdue. So once an amount that is due to the bank, that is due to be paid to the bank on a due date, or that is on the set date, is not paid, that much amount is said to be overdue. Okay, let us go to the next question now. Question 3. An NPA for a non-agree account. An NPA non-agree is a loan or an advance whose interest or installment of the principal has remained overdue for dash. Okay, so now we are talking about non-agriculture loans. Let us take a look at the options. Option A, 30 days. Option B, 90 days. Option C, 45 days. Option D, 60 days. Option E, 120 days. Okay, now by answering this question, you will get a very good understanding of what NPA is. So we already know that once the borrower does not pay either interest or the principal on the set date, that amount it will be called as overdue, and the loan account will also be called as an overdue loan account. But if it remains overdue for a certain number of days, then it will be classified as NPA. But for how many days should it be remaining under overdue to be classified as NPA? That is the question. So if a non-agree loan account, if it remains overdue for 30 days, will it become NPA? Or if it remains overdue for 90 days, then it will become NPA, or for 45 days or 60 days or 120 days. So that is the question. So what is the answer here? The answer is option B, 90 days. It means that for a non-agriculture loan, if the interest or principal installment is not repaid for more than 90 days, then that non-agriculture loan account, it will be classified as non-performing asset or NPA. Since that date, it will stop generating any income to the bank, and the bank will have to set aside a portion of its profit in the form of provision. Okay, done. Let us go to the next question now. Question 4. A short-term crop loan becomes NPA if it is overdue for more than. In the previous question, we understand when a non-agriculture loan account becomes NPA. But here, they are asking us for short-term crop loan, that is agriculture loan. So the rules of classifying a loan account as NPA differs for non-agriculture loans, then short-term crop loans and long-term crop loans. Here the question asks us for short-term crop loan. Okay, let us take a look at the options. Option A, 90 days. Option B, 60 days. Option C, 180 days. Option D, 1 crop season. Option E, 2 crop seasons. So here the answer definitely cannot be option A, because 90 days it is for non-agriculture loans, and I already told you the classification rules, it differs for both agriculture loans and non-agriculture loans. So the answer is definitely not option A. So we have option B, C, D and E. So what is the answer? Here the answer is option E, 2 crop seasons. So remember, for a non-agriculture loan account, for it to become an NPA, it has to remain overdue for more than 90 days. For a short-term crop loan, for it to become NPA, it has to remain overdue for more than 2 crop seasons. So what is the difference between a short-term crop loan and long-term crop loan? Any crop that is grown for a short period of time, for example, maybe paddy or tomato, such crops, they are short-term crops. For them, the loan that is given is called short-term crop loan. So such a crop loan, if it remains overdue for more than 2 crop seasons, then it becomes NPA. For a long-term crop loan, if it remains overdue for more than just 1 crop season, even then that is classified as NPA. So which are long-term crop loans? For example, all the horticulture loans, for example, coconut, mango, they are all long-term crop loans. So let me repeat all the three types of NPA classification. For non-agriculture loans, if the loan is overdue for more than 90 days, it is NPA. For short-term crop loans, if the loan is overdue for more than 2 crop seasons, it is NPA. For long-term crop loans, if the loan account is overdue for more than just 1 crop season, that is also NPA. Okay. Now, before going to the last question, the PDFs of all our YouTube questions and answers are available in our Telegram group. If you like the class, please let us know by liking and sharing the video. If you want YouTube or LinkedIn platform to show you our videos daily, subscribe to the channel. And if you want questions on any particular topic to be covered in our class, please let us know in the comments. We will cover the topic in the next class. And do take a look at our paid courses by visiting the website. The link is in the description. You can take a free mock test on the website by signing up for free. And the best part of our course is that you will get personal guidance from us. You may call us at the number on the screen anytime. Okay. Now let us get to the last question. Question 5. A CC/OD account shall be treated as out of order if Statement 1. The outstanding balance in the CC/OD account remains in excess of the sanctioned limit for 90 days. Statement 2. There has been no credit to the CC/OD account for more than 90 days. Which of the above statements is or are true? Now, what is a CC or OD account? CC stands for cash credit, OD stands for overdraft. So, these are slightly different from your normal term loans. So, for example, if you take a vehicle loan or if you take a housing loan, they are term loans. You just, once you take the loan, you just go on repaying the installments for it. But a CC or OD account, it is taken for business purposes only. You can draw the amount and you can repay it back anytime. For example, if let us say you are a borrower and you take a CC loan of 5 lakhs from a bank, you can draw all the 5 lakhs today and you can pay the entire 5 lakhs tomorrow, and again day after tomorrow you can draw the 5 lakhs back. So it is a running limit. Such loan accounts, they are called running limits. So once a CC or OD accounts, it is treated as out of order, it will become NPA. So for a CC or OD account to become NPA, what are the conditions? That is the question. Statement 1. The outstanding balance in the CC or OD account remains in excess of the sanction limit for 90 days. That is, if your CC limit is 5 lakh, let us say, and it remains more than 5 lakh. How can it remain more than 5 lakh? Because interest would be debited for it. Let us say you drew 5 lakh today and you did not repay anything. After 30 days, interest will be applied for the 5 lakh that you drew. Let us say the interest was 5,000 rupees or so. So the loan account, it will be due for 5 lakh 5,000 rupees, and the next month another 5,000, and the next month another 5,000. So that way, if the outstanding balance of the CCOD account, if it remains in excess of the sanctioned limit for more than 90 days, does it get to be treated as out of order? That is statement 1. And statement 2, there has been no credit to the CCOD account for more than 90 days. Does the CC or OD account become out of order or NPA even then? That is the question. Okay, let us look at the options. Option A, only statement 1. Option B, only statement 2. Option C, both 1 and 2. Option D, neither 1 nor 2. Option E, depends on the security. So what is the answer here? Here the answer is both 1 and 2. So a CC or OD account, it will be treated as out of order or NPA if the outstanding balance in the account remains in excess for more than 90 days, or if there has been no credit to the account for more than 90 days. Even if the limit is below the, so even if the balance is below the limit, for example, you have taken 5 lakh CC from your bank account, but you have drawn only 1 lakh, let us say. So you can still draw 4 lakh from it, but you have to serve interest for the 1 lakh that you have drawn. If you do not serve it, even then the account will be out of order and hence NPA. Okay. So here you learned NPA classification rules for all the 4 types of loan accounts. First you learned it for non-agriculture loans, then for short-term crop loans, then for long-term crop loans, and then for CCOD accounts. Okay. So this will be the all the types of NPA classification. Okay. Now we shall end the class here, and let me remind you for one last time, there is a live strategy session on preparation for SBI CBO exam tomorrow, that is Sunday 15th of June. It is open for all. This interactive session will be taken by Mallikarjun sir, who is a bank exam mentor and an experienced banker himself. You may be attempting SBI CBO exam for the first time, or you may be a repeater. This session is free and it is for you, because after you have attended it, you will not have any confusion regarding the exam. So do attend the session and have all of your queries attended. Thank you. All the best.